Good morning, ladies and gentlemen, and welcome to the CHAARAT Gold Holdings Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. The company may not be in a position to answer every question it receives during the meeting itself. However, it will publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand over to Artem Volinets and Chris Egger, CFO of CHAARAT Gold Holdings. Good morning, gentlemen.
Good morning. Thank you everyone for joining. This is Artem. I'm CEO of CHAARAT. Let us flip some slides to focus on first 6 months of this year. We have today on a call Chris and Patrick and myself, and we're happy to answer any questions that you may have. To remind everyone what we have in form of CHAARAT is 3 assets across 2 jurisdictions. We have transformed the company into being a producer over the last 2 years. We now generate around 20 million in EBITDA in town of Kapan, producing 55,000 ounces of gold equivalent. We are building a second project in Kyrgyz Republic, Tulkubash, that is expected to start producing in the second half of 2022 with just under 100,000 ounces of gold. Approximately over the same period of time, over the next 2 years, we also plan to put into operation an east flank of Kapan mine, increasing the throughput through the mill from 700,000 tons to 1 million tons, with approximate addition to the production to the total of 75,000 to 80,000 ounces, obviously with corresponding impact on financial performance. So in 2 years from now, we should be on track to be producing 180,000 ounces. And then as a final stage of organic growth, we are working on putting Kuzultash, our largest asset in Kyrgyz Republic, into production. That has 5.4 million ounces and is capable of producing around 300,000 ounces per year. So with that in production in 2026, according to our plans, we will bring the total production levels from our existing resource base of 10 million ounces. We will be producing 500,000 ounces per year. This is all before any additional M&A opportunities that we are constantly working on. Kapan was the first of those. We bought the asset for effectively 2.5 times EBITDA, 0.3-0.4 price to NAV, and we will continue to look for value accretive opportunities for ourselves and for our shareholders. A few words on highlights on the first half of this year. First, and perhaps most importantly, for the first company history group EBITDA at the holding level, at something that has not been the case for CHAARAT, as it never produced cash flows until we acquired Kapan. A very positive development, which we are pleased with. And it demonstrates that we are hitting our milestones as planned. The EBITDA for the first 6 months of the year were just over $4 million, but we had to delay some of the shipments into July. So with July numbers, that is $8.3 million. Given the fact that in the first half of the year, the base metal prices moved in a different direction to gold and silver prices, but has started to move into the positive trajectory from the middle of the year. We expect a much better second half, also helped by the improved recoveries as we in May and June we installed new cyclones and also will be helped by the processing of third-party ore that we started to do in May, and now we are doing processing about 10,000 tons of third-party ore per month, which goes straight to the bottom line as we're doing it on a tolling basis. Kapan has continued to operate steadily and profitably during the COVID crisis, despite the fact that the country was shut down to outside visitors, with the borders closed, an emergency situation declared. The fact that we managed to operate the mine without any hiccups is a good statement to our way that we work in these countries, in our countries of operation, where our assets are run by the local people. We do not send expensive experts to run the assets for us, but we work in a partnership with the local community to develop the local talent. And now that has shown to be very successful in the case of Kapan, which didn't have a single day of downtime during the pandemic. In the Kyrgyz Republic, we continued to progress on construction in Tulkubash, thanks to our partnership with Chiftai, the mining contractor, who had 33 pieces of equipment on the site, and the team on the site. We continue to do earth moving works. Now the borders has opened, and we are moving the 360 people camp into the site to have it fully installed and ready for new employees when we start full-scale construction next year when the snow melts. In Kuzultash, we have completed the metallurgical assessment in the first half of this year, which confirmed 90% recoveries possible from the massive Kuzultash ore body, and we're moving into selection of the process technology by in the first quarter of next year. That will be followed by the update to the Chinese feasibility study and start of construction, leading to the first gold in 2026. In the middle of the pandemic, we have completed an equity raise, one of the probably the only mining company, the first one in London to do that. That shows our ability to attract capital, reduce debt, and proactively manage our balance sheet even in the most difficult times on the markets. As I mentioned, we expect a strong second half due to the operational improvements, third-party ore processing, and continuous cost reduction at Kapan. A few words, as I mentioned, on ESG, which is a massively important part of our philosophy and our strategy and our thinking. This is the foundation of our success in this, which came to fruition really during the COVID crisis. We have done quite a bit to help our communities, renovating a hospital in Kapan, providing medical equipment and supplies in both countries, providing food to the villages affected by the close of the borders, which were shut down from outside world. And that approach continues to help us to work very successfully in both countries, where again we do not have a massive and expensive expat crew. In Armenia, 98% of our people are local Armenians. In Kyrgyz Republic, 90% of the people are local nationals, and the rest are local Central Asian nationals. And that is the only way we believe that one can work in these countries on a sustainable basis for a long time. Chris, perhaps over to you to discuss some numbers.
Sure. Thanks, Artem, and nice to meet you all. Look, I think as Artem highlighted, I'm quite pleased with the first half and how it progressed. To dive into some of the details around Kapan, and then we'll go through the financial numbers in more detail in the back. But look, I think when you think about the operating metrics, we fixed quite a bit of the activity that was left by Polymetal. So most importantly, on the mining side, at the tons mined, perhaps we see consistent progress. and we're starting to hit the capacity of the mine with regards to throughput. So the mine has a capacity to basically extract roughly 700,000 tons of ore from the existing mine, which is where we are today. Then the next sort of line item is grade. On the grade side, last year we benefited in the very first half from some stockpiles of high-grade ore. That's an area of improvement that we continue to see, and probably we're spending a lot of our efforts is to maximize the grade. As you know, any increase in grades will drop straight to the bottom line. So whilst we were happy with the first half grade of this year, we were hoping to have it a bit higher. And as we're looking at all the initiatives that we have ongoing, at this moment, we expect the second half of the year to progress from where we have been historically. The mill has a capacity of 1 million tons, and since we only process around 700,000 tons of ore from the existing mine, it gives opportunities to fill the rest of the mill with other ore. In the first instance, we are processing third-party ore, which is adding, again, additional EBITDA straight to the bottom line. That's something that we started in the month of June, so we processed 10,000 tons in June. As we look to the second half of this year, we will be processing most likely around 10,000 tons per month or thereabouts. So ideally targeting around 100,000 tons of additional third-party ore into the mill, again, to increase EBITDA. Finally, on the cost side, we make good progress in reducing our costs quarter over quarter. We still see there's some improvements in that front, but I think as Artem highlighted before, the first half EBITDA was 4.1 million. It was impacted by the fact that there were certain copper concentrate shipments in June that were pushed into July. We also published our July unaudited results of 4.2 million. So for the first 7 months, that 8.3 million is a substantial increase year over year. But most importantly is in July, and as we're seeing in August, is the current gold price environment continues to be very robust with gold near 2,000. And the base metal prices have now also rebounded from the lows that we saw in the first half. So as we're heading into the second half of the year, with the improvements in grades, continued throughput activity, and much better pricing environment, we should expect a much higher significant Kapan EBITDA relative to the first half, which will also continue to assist in the business. Artem?
Yep. I think the biggest upside we see in Kapan is development of the east flank. That is a large ore body, which effectively continuation of the same deposit. That is something that has a potential of approximately 5 to 6 million ton. Obviously, we'll have a significant increase on our mine life, but importantly on the production level. As Chris mentioned, we have 1 million ton capacity at the mill. Current mine produces 700,000 tons. With the opening of the east flank, that will enable us to load the mill with our own ore. So in the meantime, we'll be processing third-party ore, but 2 years from now, we'll be shifting to our own ore. The good news that development of that east flank is relatively low capex. We estimate we need about $10 million over the next 2 years, which will be funded from Kapan cash flows to do that, which essentially exploration drilling to put the resources and reserves on balance with the state authorities, acquisition of some additional mining equipment, and opening a second entrance into the mine to next with production from the central block. But that's very exciting and a path that we're working on to increase production from Kapan to 75,000-80,000 ounces per year. And Tulkubash, as I mentioned, we very much continued to work despite the pandemic restrictions in the country. Having a contractor on the site has helped us to continue doing earthworks. We have completed many parts of the detailed design and engineering. And now, as I did mention before, we are moving the 360 people camp into the site to enable full-scale construction from spring of next year when the snow melts. In the meantime, project finance discussions continues. We have 5 different funding groups that we are speaking with, and we expect to close project within 6 months, which, by the way, would enable us to build Tulkubash without any significant dilution to CHAARAT shareholders, as we have our mining contractor, Chiftai, investing through work in kind to get to 12.5% in the project, and the remaining capital that needed for completion of this project will be provided by project finance. Total, we invested so far $40 million. Total capex remaining 110, 30 of that provided by Chiftai, 80 million is by project finance. We have made progress on our biggest deposit, Kuzultash, in the first half of this year, completed metallurgical assessment by John Marsden, which is a well-known globally professional in the sector, confirmed the recovery, so up to 90%, identified several processing technologies, routes, and plan to complete the decision on a processing route in the first quarter of next year, which is a way for us to update the Chinese feasibility study to Western standards, and that will enable us to raise project finance. Just to remind everyone, the Chinese study done in 2016 by a Chinese company, Nerin, estimated NPV of this project at 310 at $12.50 gold price. If you plug today's gold price into that model, that gives out $1.2 billion of net present value. So we can certainly say that Kuzultash value is not included in CHAARAT market cap at all today. As we move along on the project development timeline, that value will be starting to get visible in our market cap. Chris?
Just so to run a bit more through the numbers as we've been talking through the presentation. Specifically on the left side, you see our actual H1 income statement for the first half. On the revenue line item things, the numbers incorporate only Kapan, and the revenues were down year over year, and it was as a result of what Artem had at the very beginning of the presentation, whereby whilst we saw higher gold prices year over year, the base metal prices, the copper, silver, and zinc, all also reduced year over year and actually had a negative impact. In the administrative expenses, there's obviously expenses related to not only Kapan, but also corporate and our Bishkek operations, and therefore we have the table on top right that splits out the EBITDA between the different entities, which we have been alluding to throughout the document. As Artem also highlighted, this is the first time that the company has achieved a positive EBITDA. It's as a result of a number of factors, but if you worked way down the table, we saw in Bishkek slightly reduced activities in the first half of the year as a result of the COVID pandemic. Therefore, costs came down, but we actually will expect those costs to start to increase as we move into more full-stage construction towards the end of this year and into next year. In Armenia, as I said before, the EBITDA was 4.1 million, but again, should have been a much higher EBITDA should two things happen. One, that the concentrate sales in June moved in July, and we would have had the pricing that we're now achieving in these current months. On the corporate side, we also achieved significant savings versus last year, although I will note that last year we had extraordinary expenses as a result of the Kapan acquisition, which contributed quite a bit of expenses to the business. So perhaps moving to the balance sheet side of things, we continue to be very proactive in managing our balance sheet. Also, as Artem highlighted, in the first half of this year, we raised equity of roughly $14 million. That was due to obviously increase our liquidity, strengthen the balance sheet, but we also took the time to work with our lending facilities in extending maturities to the end of this year. So in April, we raised equity, increased liquidity, extended our maturities, and also in the first half of the year, we reduced our debt by roughly $10 million. So today we're sitting at approximately $70 million worth of debt, but at the beginning of the year, that number was 80. So the $10 million reduction in debt came partially from the equity raise, so $6 million of the equity raised in April was used to pay down debt, and another 4 million was through operating cash flows to reduce the Kapan senior secured facility that we have today at $30 million. So we're quite happy with the debt profile that we have. So when we look at where we are today, we have that $70 million broken up into basically 3 buckets. There's an investor loan facility of just shy of $20 million. This comes due at the end of this year. We are actively discussing with financing parties the refinancing of that facility. So when we look at our capital needs in the business and how it was described in our press releases, capital needs relate to this facility and refinancing this facility with another debt facility. We have created debt capacity in the business through, one, obviously paying down our debt, but also, more importantly, by the EBITDA of the business turning positive and the increased EBITDA at Kapan. So the big effort that we have today is obviously refinancing this investor facility with another debt facility. The other instrument that we have on our balance sheet today is a convertible bond. This bond comes due in September of next year. It has a conversion price of 37p, roughly where we've been trading over the past week or so. We believe that this bond will actually get converted into equity as a form of the managing of the exit of this bond, but we will continue to obviously proactively look at options to refinance this bond should we see a different movement in the share price. But this bond was put back in place in 2018, and I think the investors are quite happy with most likely converting it into equity, depending on the share price. Finally, we have a $30 million outstanding senior secured facility in Japan. This facility used to be $40 million. It was part of the financing package for the purchase of Kapan. Kapan was a $50 million acquisition. So $40 million financing package came from three banks based in Armenia, and the rest was equity. So today we are paid back down to $30 million. So as we look into the future with regards to our financing initiatives, we're very much focused also on completing the project financing for Tulkabash. We're focused on refinancing the current investor loan, but we're also always looking for opportunistic capital opportunities to continue to add value to the business, accelerate our strategic initiatives. So we remain very diligent, proactive in assessing capital opportunities should they come through. When we look a little bit at the capital market side of things, I think over the past 2 years, we've done quite a bit in order to explain to the market how we have been executing the strategy, and that's starting to work its way through. After we announced the results on Friday of last week, FinCap upgraded their share price, and so that has a target share price of 60p. So when you think about the broker community today, target share price is around 54p. More importantly, I think you need to look at the value of the business on an asset level, which is what we've highlighted on the right side of the page. We do see continued upside potential in all these numbers. So specifically, for example, at Kapan, the $150 million $150 million value that you see on the page the brokers describe do not incorporate any value in the East Flank expansion. And we think that will add substantial value because East Flank is a fairly inexpensive ability to fill the mill with your own ore. It'll take 2 years, but that will add quite a bit of value, increasing that number ideally over 200 million. But probably the most important aspect is Kyzyltash. So Kyzyltash today has 5.4 million ounces. It's a massive ore body. It's extremely leveraged to the gold price and will continue to grow in value as the gold price increases, but also more importantly as we continue to develop the asset. So this asset will be several $billion once it's up and running. And when you think about where the company is trading today relative to its peers, and the bottom part of the page on this chart really reflects this, is that we have over 10 million ounces of gold, more than Polymetal, but yet we trade the very bottom end of the curve with respects to the size of the amount of gold we have in the ground. So huge value potential that we see today in the share price because of the fact that we have 10 million ounces of gold, which I'm not so sure is recognized by the market fully. When you look at the top part of the page, I think we've performed decently relative to the indexes and how we have actually delivered on the story to date. Because in 2018, when we first came into the business, we were effectively a single company asset, and now we're a producing asset, advancing the construction of Tulkabash and also advancing the development of Kyzyltash. So quite a bit additional value to come on the share price. But made with that, I'll hand it back over to Artem for some final remarks.
Thank you, Chris. Just to summarize, we have moved CHAARAT quite a bit over the last 2 years. When I joined the company, shares were under 20p, and we had $20 million in debt. Since then, the market cap probably went up 2.5 times, enterprise value 3 times. That's possible because we put a proper management team in place, designed and started executing on a growth strategy to bring our existing assets into production and execute on value accretive M&A, of which Kapan was the first acquisition. We do have supporting shareholders, but perhaps even more important, and at least most important for me, is that holders ourselves. All the top management and all the board members put their own money into the company. We do not pay ourselves cash bonuses. We are fully incentivized by the share and option scheme, and therefore we are not going to do things which are dilutive or destructive for our shareholders, because we are shareholders ourselves. And we believe in this story. With a tenfold increase in production we're planning for the next 6 to 7 years, we expect a corresponding increase in share price, and this is obviously even before before any additional M&A opportunities. With that, we will move into the questions and answers.
Thank you very much, Artem. Thank you. Ladies and gentlemen, just before we do go into the Q&A session, I wondered if I could remind you that you can continue to submit questions using the Q&A tab situated on the right-hand corner of your screen. I'd also like to remind you that feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Artem, Chris, before I guess we look at some of the questions that have been submitted during the live event, investors had the ability to pre-submit questions. And perhaps I could just read these out and you guys could take them where it's appropriate. The first question we have was, M&A activity has been much lower than I expected. Can management update on the M&A pipeline?
M&A is something that we can announce only when it's done. What I can reassure you is that we are constantly working on M&A opportunities. In my experience, having done a number of deals in the past, you are certain that transaction is going to proceed when you are working on 5 different opportunities at the same time. That is the case today, and we are progressing on a number of fronts, but it will be done when it will be done.
Thank you very much. Regarding the east flank at Kapan, this sounds like it could be potentially a big game changer. Could you give a bit more history on the discovery? It is not a brand new discovery, and was it not considered by Polymetal for development? There's a number of parts to this. Did the east flank therefore have little influence on the price we paid for Kapan? And could you go over again how confident we are of this being fruitful and when we might have a more definitive drill data?
Polymetal had a slightly different strategy for utilizing the mill capacity. Had a neighboring deposit called Leach Class. By the way, that's a third-party ore that we are processing now. That they wanted to that they owned, and they wanted to process leach class ore at Kapan. So they paid less attention to the possibilities of organic growth from Kapan mine itself. We have brought in a very experienced new geological team in the beginning of this year, who has identified east flank as a very possible and practical expansion opportunity. That data that we are using has always been there. What is required now is additional drilling to confirm the resources and convert them into the reserves, put them on balance with the state authorities so we can start mining from there. We are very confident that this is possible, and possible at relatively low capex, as I explained already. This is continuation of our own mine. What it will require is the opening of a second entrance into the mine to avoid the bottleneck. But again, this is brownfield development, so low risk, low capex, significant upside potential.
That's very kind. Thank you very much. A further question came in, which I'll skip the first bit, which is about perhaps providing a pie chart in terms of the various metals produced. But the final part of the question is, will Tulkubash or Kiziltash produce other metals besides gold?
Tulkubash and Kiziltash are predominantly gold. They have some supporting silver, but it will be gold and the silver doré bars, which will be produced at this sites.
Thank you. And one final one, if I may, before there's a few questions just on the live Q&A chat. The assessment by John Marsden was great news in the middle of 2020, and it was important to hear that you are still putting effort into developing Kiziltash. How realistic is it that this project can come into production in 2026 and produce 300 KOs?
When we put a new professional team in place 2 years ago, we done it with a view to start looking systematically at the company assets and develop a strategy that would enable us to produce from Kiziltash, as it's our biggest assets and most promising in terms of the potential value. As Chris mentioned, once in production, this could be several $1 billion operation. So we are moving steadily on that development pipeline. The metallurgical assessment was the first step. Now moving into the portion selection technology, moving update of the feasibility study. So yes, we are very confident that we will get to the first gold on a timetable indicated.
That's very, very kind of you. Thank you very much indeed. So that addresses really the pre-submitted questions received ahead of today's event. There are a couple of questions, obviously, in the live Q&A. If I could just ask you to click on the Q&A tab, which is situated.
Yes, I see them.
Perfect.
We'll start answering.
Could I ask you
those
to?
Questions.
That's perfect. Could I ask you to read out the question as well as give your response? Only that obviously no investor can see another investor's question. Thank you very much indeed.
Yeah.
Sorry, Artem, we're just losing your bandwidth. Is dropping marginally in or out. Patrick, I don't know whether you can just jump in and perhaps just while Artem comes back into the room, perhaps you could take some of the questions with Chris.
Yes. Yeah, right. I mean, look, I can read the first one. The question is basically great progress. What are the biggest risks to your execution of your production strategy? Look, I guess it's also going to be asset specific when one looks at the business. Japan is an established mine for 15 years of operation. And I would say there's not going to be one big risk there. You need to consistently blocking and tackling and operate that mine and focusing on maintaining community relationships, keeping your costs down. See, we look at the gold price, but we can't control that. So what you can control is your operations. And in that respect, we are actively managing all aspects of those operations. And as I highlighted before, with the focus on grade. When you then think about Tulkubash, obviously we need to get that asset into production. So the key milestone is getting the project financing completed, will probably be the biggest risk. And Tulkubash is advancing the timeline, which is a pretty straightforward timeline, and the deposit is pretty high quality.
If I may add to that.
Less the focus.
Yeah, sorry guys, had a problem with the connection. If I may add to the way we look at the risks to the execution
Artem, if I could suggest
of the production strategy in any country, in any place in the world.
Artem, if I may just interject, if you wouldn't mind just going to the top of the screen and turning your camera off, that will release some of the bandwidth that it's consuming, and we'll be able to hear you better on the audio. Alternatively, I will be sending you a link with a audio bridge dial-in. Chris, may I just hand back to you momentarily?
Yep, no, we'll do, and maybe we should get him on the phone as we suggested.
Yeah, absolutely.
So maybe moving to the next question, where do you see the tipping point to profit timeline-wise? So look, with the current assets that we have in place, whilst we have profits coming from Kapan, they likely will not cover the profits from the expenses that we incur at Tulkabash and the corporate side, because most importantly, at Tulkabash for the next 2 years, we will be in the construction phase. So the business as a whole will turn profitable most likely once we get Tulkabash into operation, which will be at the end of 2022 and into 2023, unless obviously there's a transformative M&A transaction that changes the business between that point. The next question I think was answered was how do we look to fund any M&A? Look, we spoke about the M&A strategy and what we are doing around M&A and how it's actually a very big part of our DNA and active timeline. I think when we think about future M&A, we'll look to fund it with a mixture of debt and equity. But I think what's really important on this side is that every time we do M&A or anything we do in the business, we focus on the share price and making sure that the transaction is accretive to our existing shareholders. There are many mining companies that will come into light and will basically destroy existing shareholder value at the expense of future shareholders. But when we think about the M&A side with funding, we will fund it with a mixture of debt and equity, but it will be done in a way that is accretive to our existing shareholders.
Artem, I think you're rejoining on the audio bridge. If I can just make sure your computer is on mute to avoid any feedback. You'll need just to make sure.
Here.
Perfect. Thank you, sir.
Artem, I was just reading through the question. So the next question is, what's the best case all-in sustaining cost for Kapan? How much further can it be reduced realistically?
Or maybe
I'll continue to take that one, then I'll pass it to you. So look, I don't know if we can provide a best case. In mining, as I said before, we focus on controlling our costs, and we spend quite a bit of time on the cost side. Also, Kapan has a number of costs associated in local currency in DRAM, which impacts the ISIX, plus or minus. So look, I think we can reduce the cost by maybe another $50 to $100. Will it go down to $300? No, it's a complicated underground polymetallic mine. I think we're pleased with the cost reductions that we've made to date. The focus from a value perspective is much more on the grade versus the cost. You always have to be on top of the cost, but like I said before, it's really a focus of grade at the mine.
I would also add to that one of the sources of additional cost reduction was our ability to bring outsourced operations back into house. Polymetal outsourced number of mining, contract mining, and then some repairs, etc. As they didn't want to get involved deeply into the management of the operations locally. We're bringing those back in house, and that has obviously a potential for reduction in all-in sustaining costs.
Artem, do you want to continue on the questions, or would you like me to read them?
If you can continue, please, and I'll jump in.
Okay. The next question is the updated Tulkabash BFS still due for Q3 of this year? Look, I would say that it's for this year. Whether it will be exactly Q3 is still TBD, but we're obviously incorporating additional drill data into the BFS and doing the work necessary. So we anticipate an updated BFS for sure in 2020. The next question says this: there has been good days/weeks this year where the trading was reasonably liquid for the CHAARAT, but there are still too many days, sometimes whole weeks, where it is very illiquid, with barely anyone who is trading shares. What can be done to produce liquidity? So look, we obviously recognize that the volumes are quite low. It's been an impact with bringing investors into the business into the past. Frankly, what we're doing today and the marketing that we've been doing over the past 2 years has been in an effort to additionally assist in that, bringing up that liquidity when you also need to execute on the strategy. I think part of the problem is we have a lot of investors that got into the stock at an early age that actually see continued progress and aren't looking to sell and want to continue to see the story evolve. Myself, for example, I have no interest in selling the stock. I wouldn't. We see tremendous upside potential, and quite frankly, a lot of our shareholders are in the same bucket with regards to how they look at the stock and look at the continued growth potential. I think that's unfortunately a byproduct of the lack of liquidity. We've also brought on new brokers. We've just recently appointed Canaccord as our broker nomad. We've also included brokers that have market making capabilities, spend time with the sales desk in order to try and promote the stock to a broader set of clients. We're doing retail and institutional marketing, not only in London and in the UK, but also in Europe and the rest of the world, to try and also continue to promote the story in order to increase the liquidity of the stock. So I think we recognize it. We're working on it. Unfortunately, I think it's going to take a bit more time. As like I said before, we have a lot of investors that are very much looking for the long-term value appreciation of the story.
That's perfect. Thank you very much. Thank you, Artem. Thank you, Chris. And apologies for the audio interruption, I guess, that we've had. And obviously, these things can happen during live events. Perhaps, Chris, I could just ask you or Artem to wrap up, and then I will divert investors to give a feedback, which I know would be greatly appreciated.
Yes, and thank you very much, everyone. Apologies for the connections issues. I guess when everybody is working from home, the impact on broadband is significant. We are pleased with the interest, and thank you very much for your interest in the company. We only started on execution of this strategy, which should lead us to increase the production from our existing assets tenfold. And we're all shareholders, and we, as Chris said, we have no intentions of selling the stock, but keen to see it increasing in accordance with our execution of the stated strategy. Thank you.
That's very kind. Thank you very much indeed to both Chris and to Artem. Ladies and gentlemen, please do not close this session, because you will be automatically redirected for the opportunity to provide feedback. If you access this meeting from our website, the link will appear. If you clicked it on the link that was sent to you by email, you'll be simply asked to log back in to provide your feedback. So on behalf of the management team at CHAARAT Gold Holdings, I would like to thank you for attending today's presentation. I'd like to apologise for any inconvenience caused through the audio and wish you a good morning. Thank you very much.